Aloha folks, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to talk about a company that has been rated as a buy. If you have invested in this company 10 years ago, you would have been up 353%. The dividend growth in the last 5 years has been 17%. So if you want to check this out, definitely put this on your watch list. As always, please remember that this is not financial advice. I'm not a financial advisor. With that said, let's take a look at this company. So the company I'm talking about is Texas Roadhouse. The ticker symbol is TXRH. If you're not familiar with this company, it is an American steakhouse chain specializing in steaks, Texas and Southwestern cuisine. Revenue is about $2.8 billion. Definitely one of my favorite restaurants to go. You got all these yummy foods to go and check it out. So if you got an opportunity, definitely check it out. It's a great place to go. Bring your family, friends. Desserts are really great as well. If we go over to Simply Safe Dividend, based on their dividend safety score, they rate it as 80, which is safe. Dividend yield is 2.0, and then the market cap is about 7.3 billion. And then if you look at the key metrics, you can see payout ratio is 46, forward payout ratio is 45. Now if you look at the dividend growth, last 5 years it's about 17%, which is very fast. Last 10 years 18%. Check this out, the last 20 years, which is last 20 on February 23rd, 20%, which is very fast. Dividend growth, not so much. The past 2 years it has been increased, but then if you look at the dividend growth 2 years without a reduction, you can see from here, from the 2020, it went down. Now, if you look at the payout details, you can see payout quarterly in the months of March, June, September, and December, and then your annual payout is about $2.20 per share. Ex-dividend date is June 6, which has passed. If you look down, some of the analysis is reasonably valued. It is a little bit higher in the 52-week range, a little bit closer to it. And then if you look at the financials, you can see, again, free cash flow payout ratio, 55%. Earnings payout ratio is 45. And then you look at the sales growth, and then the total sales, outstanding millions. Return on invested capital, you can see 18%. Return on equity, it's about 27%. Now, if we go over to this chart right here, so basically, if you would have invested 10,000 of this in when you started it in 2015 and you ended in June 16, 2023, versus the S&P 500, you would have had a total return of 242 versus the S&P 500 of 109. Compound annual growth rate of 16% versus the S&P 500 of 9%. And then your ending investment would have been 34,000, whereas the S&P 500 would have been 20,000, and this is in year 8. So definitely for you to consider. So again, it's not financial advice. And then let's take a look at bar chart. You can see based on their analysis, they rated as a moderate buy. Based on 17 analysis, you can see 3 months have always been moderate buy. You can look at the current breakdown: 6 strong, 1 strong sell, and then 10 holds. Now, if we go to CNN Business, based on their forecast, at the time of this video is about 109. They have a high of 131, a medium of 120, and then a low of 103. And then their recommended rating is a hold, but there's 9 buys, 1 sell. Now, so swing to Simply Wall Street, share price versus fair value. They rate it as overvalued of 79%. Currently, it's about 106. They feel the fair value of this is $61. And then if you look at the financial health, you can see right here the financial positions. You can see the assets versus the liabilities. short-term and long-term. So now if we swing to NASDAQ, based on their analysis, they rate it as a buy. There's about 20 of them, and some of the firms are Citigroup, you see JP Morgan, you can see Morgan Stanley, you can see Raymond James, and UBS. Now, swinging over to Webull, you can see based on their analysis also is rated as a buy. There's about 22 with a strong buy of 22%, a hold of 54%, and then a buy of 18%. And then their target price, pretty much similar, 131, 116, and then 103. The time of this video is about 109. And then you got your institutional holdings over here. Now, if we go to Yahoo Finance, based on the top institutional holdings, you can see they reported on March 30, 2023. You got BlackRock, Vanguard, Bank of America, JP Morgan. And then if we continue with Yahoo Finance, so basically what you want to see here is comparison with the S&P 500. So you can see the S&P 500 is the blue, and then Texas Roadhouse. You can see it's been pretty much doing better than the S&P 500. So, and then if you look at this chart as well, you can see for the 10-year, it's up 353%, and then the 5-year, as you can see, is 62%. So that's it. My take on this one, I think it is a great company to invest on. I would wait for a dip since it's a little bit high, but looking at all the key metrics, I think this is a solid company to invest on. Definitely, if you haven't put this on your watch list, you definitely put it on your watch list, and do more research as well. So with that said, thank you so much for watching, guys. Hope you like this video. Definitely give it a thumbs up. As always, please remember to check out the other videos as well. Stay cool, keep investing, and I'll catch you guys on the next video. All right, take care. Aloha.